Today is Friday, October the 18th, and you can see by the ES Mini Futures that we hit the overnight high, the Globex high at 7:50, 10 to 8 this morning, and it was downhill from there. We never came back to test the Globex high. In fact, we passed prior day's low, and we found pretty much support for about a half an hour here, or about a half an hour at the Globex low. And there were some buyers that brought us up to 38.2% of the Fibonacci, but that was it. And then we crashed. And we exceeded the Globex low by quite a bit, moving back up to 38.2, the same high that we had at 11 o'clock in the morning. And then the sellers came in, and we finished the day below the Globex low. So all of that to say that that's not the sign of a really strong market. Looking at the FinViz, advancers and decliners. Decliners slightly outpaced the advancers by about 10 points, and the market finished the day on a red 5-minute candle. So that is going to take the market breadth now back. Well, it's going to leave it the same place where it is. So we've got about 3 or 4 days, but we've got a whole week. This whole week we just churned around in this area on the side of the positive side of the neutral line. So the money that's moving into the market, the momentum of money moving into the market now has stalled. Let's take a look at some charts. The S&P down 12 points. Whoops, let's bring it up here. And what do we see in terms of the Ichimoku? Remember yesterday we talked about the chikou span. If the chikou span opens higher, and where did it open? Right here. It opened right here. So it opened underneath. It opened right above that green arrow right there. So it opened underneath the candles, and its high of the day was where? Exactly. I mean, look at that. Right at the tip of this candle wick 26 days ago. This is why it's important to use the chikou span. And this is what I mentioned today in the video, that if we open in this area here, so there was the open yesterday, the finish yesterday. I said if we open sideways or even up just a little bit, we were going to get interference by this candle wick here, and that's exactly what happened. Look at the top of today's movement. It was right there. Now go back 26 days back, and where is that? It's at the wick of that candle 26 days back. This is how the chikou span works. And automated traders that have got their computers set up to trade using the Ichimoku are going to trade on the chikou span. That's not something that a lot of people know about, and that's why they set it up that way. So we did get support on the 8 EMA. Weakness next week, and it looks like the China trade deal, although Trump says it could be signed by the middle of November. I don't think anything could be further from the truth. The Chinese have already signaled that they're not going to buy the soy products from Midwest farmers, as Trump said that they would. In fact, they've never yet said it out loud that they were going to do it. Their media never confirmed that China had any intention, coming from the meeting last week, of buying any China or any agricultural products. So that soured the market a little bit. I think the earnings this week were fairly good, but we go into a big series of earnings next week. So all the big names are going to be there: Google, Facebook, Caterpillar, WDC, Whirlpool, you name it. They're all going to be there. Apple was a strong one, up $1.07. And we've channeled here, so that means that the puts that we've sold just continue to increase in value in our favor by just decaying. So the time premium just decays. And if it continued like this for the next 60 days, that'd be fine. But with earnings coming up a week from Monday, I won't be holding those puts. Next Monday, I will be getting into a different position, and we'll talk about that when we get closer there. But the volatility on those puts for the week of October 30th are going to be very high and are going to be very attractive for selling. Meanwhile, the volatility in our December puts isn't going to be affected by the earnings to the same extent that the weekly options are going to be. So we'll be able to take a profit in those December puts and then put on some new puts that are only 1 week long or maybe 2 weeks, but take advantage of the higher volatility, which of course all disappears the day after earnings. Caterpillar down only 33 cents, but this alert here is what I was talking about when I said I would like to be a buyer when we come back and test. Let me get rid of all the alerts here. When we come back, I didn't get rid of it, did I? Anyhow, let's go to the 15-minute chart, and you will see that we came down. We didn't quite come down to test the 200 EMA. We did get a little bit closer to the 200 SMA is right here. We did get a little bit close to it right here on this candle, and that's where the alert was set off. But that was good enough for me to buy another 200 shares, the ones that I had given up earlier at around 128. Today, the stock went ex-dividend by $1.03, and the stock was down by only 33 cents. So that shows confidence that people were willing to buy the stock in spite of not being able to take advantage of the dollar premium for the dividend. Now they have to wait another 90 days. But that's a sign of strength. Now let's take a look at the volume and see if the volume confirmed that. And yes, although we had a red candle, the volume was quite high. So this is not just a mom and pop who are buying Caterpillar. This is large institutions that are able to make the volume higher than the 20-day moving average in volume. So that's a really good sign. Let's look at Apple's volume. Pretty low. We had low volume for 5 days. Let's go back and look at overall market volume, because we didn't do that here. But we had extremely large volume in the Dow, and a lot of that I'm sure was driven by Boeing, who had some bad news, and Boeing is the one who brought the Dow down, particularly late afternoon when the news came out about what some pilots had reported about the 737 MAX. NASDAQ volume was much higher than we've seen and was closer to normal volume, and so was the S&P 500. So the trading that we saw to the downside, that's committed trading. GDX, however, was only up 5 cents for the day, but I'll take it. It's still our hedge. AT&T had a very strong day, and I'm in a full position of AT&T. So look at that. The next thing that we've got to look for is this gap. And this gap goes all the way back to gap created on October the 6th, 2017, that hasn't been filled yet. But two things are important. Number one is that we're getting close to the 61.8, very close, and that's going to be where some sellers are going to be sitting at until they can get a retest of the 8 EMA to buy again, and then resistance is going to be at 38.85. But look what we had here. The chikou span finished right safely on top of this candle, not in it and not below it, but right on top. So that's a signal that next week AT&T is going to move higher. I hope you've got AT&T. We did not, I said back here, back on September the 19th, that we were heading for a collision with the cloud. Clearly that didn't happen. Although we channeled for a long time. We channeled for about a month, and then we finally broke out of that channel today. So we were attracted by the cloud, but we managed to avoid testing the 50, SMA and EMA and the cloud today, which were all within the same narrow range. They should have been an attraction, but they weren't. So that's a sign of strength, and we had volume pop a little bit above the 20-day moving average, and that's the first time that we've seen that since September the 20th. So this was institutional buying for this big candle, and this is institutional buying for this big candle. So I hope that you're in AT&T, but it's not too late. You can ride it up to 38.86, and then you can sell it, and you can buy back after it fights with this gap here. Amazon had a down day today, as we said that it would, because there's too much cloud resistance here for the stock to move up. We still have, for the chikou span, we still have to break out of the 200 and all of these candles. So there's quite a bit of technical work for Amazon to have to do here. And today it was on low volume, and it's been low volume since the beginning of October. We just had one day where we snuck above the moving average, 20-day moving average on volume. I'm still not holding a position on Amazon because there's just there's not enough reason for me to be short Amazon, but there's too many technical reasons to go long on Amazon, even on a vertical call spread where the loss would be defined. Google was down today for no apparent reason. Take a look at where the earnings are next week in the big players, put them on your calendar, and get back to you on Monday.